My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes while keeping you out of jail. Today I wanted to talk about the home office deductions. I'm in the final days of the tax season, at least at the time that I'm filming this, and as I'm working on some of the business returns, I'm seeing that this deduction is either being not utilized or is just not really being utilized properly. It can be an overlooked expense because, let's face it, if you operate a business, chances are, whether you actually have an office outside of the home or a place of business outside of the home, chances are you're usually doing work at home. Even if, let's say, you have some sort of like manufacturing place, probably wind up still doing some sort of administrative work at home. So if you do, there is logic for making a home office deduction, where if you rent, you can write off a portion of your rent along with your utilities, renter's insurance, and if you own, you would write off a portion of your insurance, utilities, portion of the mortgage interest that you pay, as well as depreciation on the home, which is the actual value or price of the home. There's a portion of that you can write off over time. The way it works with the price of the home, as well as all the other expenses, is you take that deduction in proportion to the space that you use for the office versus the overall house. So for example, if you have a house that's 2,500 square feet and your office is roughly 250 square feet in that home, then 250 out of 2,500 is 10%. So all of your expenses, you can use 10% of that as a deduction. Now that works if you're a single member LLC or a sole proprietor. You would simply go in your return and report as such in the proportions that we spoke about. There are a couple extra steps that you need to take if you're set up as a corporation, whether that be S Corp, C Corp, or if you're in a partnership. If you have an S corporation or corporation, to get that home office deduction, you need to set up what's called an accountable plan, where, without getting too far in the weeds of it, essentially what you're doing is creating a policy such that you would get your company, the corporation, would reimburse you for use of the home. So for example, if you're an S corporation owner, you're the sole owner of the corporation, you own all the shares, but you do work out of home. Corporations don't necessarily have specific home office deduction like your single member LLCs do, but you create the accountable plan, which essentially is putting in writing that the company is going to reimburse you for use of your home. So you would essentially take it as if it's a distribution, but it wouldn't be classified as that. It would just be an expense. So in this instance, let's say if you're using your home, and let's say that same 10% that we spoke about before comes out to roughly $600 a month. So then the corporation would then pay you that $600 a month. The company gets to treat it as rent for paying you out, so they get the deduction on the company return, and then in turn, it's not taxable income to you, it's a reimbursement. That's how you will go about doing the whole home office deduction if you have a corporation. If you are a partner in a partnership, that home office deduction would be ran through what's called unreimbursed partner expenses. So you would take the same formula to determine what the write-off would be, but to make sure it passes muster, you have to make sure that in your partnership agreement there is no clause that says home office expenses are reimbursable, because if it is deemed reimbursable by the partnership, you can't take the deduction for it. So your partnership agreement has to specifically outline that such expenses are not reimbursable, or just can't simply say that they are. So that's all for now. If you have any questions about this topic or any other tax or accounting related issue, feel free to reach out. Happy to help. See you on the next one.